Other questions before I move on? And all of these options that we talk about, we actually pay our servicers to do. So they're being, there's an incentive to help keep people in homes and to prevent people from going to foreclosure. In this particular case, repayment plans, we pay our servicers $400 when they do these. All right, what's next? So some of the benefits of the repayment plan, let's see, is this all slow motion? Let's get that all at once. For a servicer, their non-performing loan begins to perform again. They receive their late fees, and they also receive money from us for doing the repayment plan. For us, again, the non-performing loan begins to perform, and saves us the expense of having to go through foreclosure. For the borrower, no long-term cost for the borrower, and no change in their terms, and the borrower gets to stay in their home. Yes?
But what if they're with this loan modification, and then they, you know...
This is the repayment plan.
Right. So what's the difference between the repayment plan and the loan modification? Let's say, for example, these people are in this plan and they have a house, okay, and they're...
Repayment plan might be something for somebody who maybe had a job loss.
Okay.
And they went down a couple months, but the income's back, and they can catch back up.
Okay.
And then I'll talk to the other two when we get there. This one, if you brought paper and pen, this one you might want to take notes about since it's so brand new. This is our Home Saver Advance, and it's a very neat tool that we developed to help keep borrowers in homes. It is a 15-year unsecured note, so it's not an actual mortgage. It's a 15-year unsecured note with a maximum note amount of $15,000 or 15% of the original unpaid balance. The funds from the Home Saver Advance loan can be used to catch up delinquent PITI, can catch up escrow advances, homeownership fees, and any foreclosure-related attorney fees that were incurred.
What's the definition of original unpaid balance? Is that the unpaid balance as of?
No, that's the original note amount. So okay. Day of closing note amount, the actual note, what you'll see on the note. Okay. The note carries a 0% interest rate for the first 6 months. And then after that, for the remaining term, has an interest rate of 5%. With the Home Saver Advance, the servicer does not need to notify Fannie Mae. The servicer does not need to notify the mortgage insurance company. Those approvals are not required. And we pay servicers $700 for using the Home Saver Advance.
So then they will notify you so that they can collect their $700.
Oh yeah, they code it. The servicers have a coding way. So when they report to us on a monthly basis, they will report Home Saver Advance, and we automatically fund them the money.
So how do you qualify for that?
It's going to be, the servicer's going to look at the case. So if you're talking to your borrower, and they give you a call, we're in trouble, is there anything you can do to help? If you know it's a Fannie, this is only for Fannie Mae loans. So you're not going to be able to, use a Home Saver Advance with a loan that is being serviced for Freddie Mac, a loan that's getting serviced by any of the Wall Street firms. This is just for loans that are being serviced on behalf of Fannie Mae. So that's the first cut. So if you know it's a My Community Mortgage, chances are, it could be ours. It could be our little brothers too, but chances are it could be ours. Question?
Who's putting up the dough for this loan?
Right. We are.
Fannie?
Yes.
So we apply. The
servicer gets the note information. We hired a firm that administers the program, that does the servicing for these notes. It's not the original servicer who has to service this. We take care of all that behind the scenes.
Well, aren't a lot of the delinquencies out there are non-Fannie Mae anyway?
Yes.
So they don't qualify for a loan.
This is only for, this is our answer for our loans that are on our books. Okay. Okay. Some of the benefits of the home question.
At the risk of belaboring the point, I assume that if they're only down 10 grand, they're not going to get 15 and use the extra 5 for
no,
vacation.
they only get what is needed,
okay.
And the servicer will determine that when they're doing when they're working out the Home Saver Advance case. And also, this is not for everybody. Okay. Again, RAMPD is the steps that we ask our servicers to look for. If a repayment plan won't work, well, maybe a Home Saver Advance will work. If a Home Saver Advance doesn't work, well, maybe we need to do a loan modification. If the loan modification isn't working, well, maybe they need to get out of the house, do a short sale, deed in lieu. Those options would be the next. So it's not a this fix all Fannie Mae loans. This is, if this works for that particular borrower situation, if it makes sense, then use it.
Can a borrower elect not to take any of the first three options and go directly to deed in lieu or
Absolutely.
Okay.
Yeah, if the borrower does not have that ability and does not want to stay in that house. We just had a case, and I was out in Mississippi earlier this week, where a customer, longtime customer of the bank, wasn't delinquent at all, moved out, drove up to the branch, dropped off his garage door opener and his keys, said, I don't want to have a mortgage because I hear mortgages are bad right now. Yeah, I was kind of like,
And you got hit him.
that's what happens in Mississippi. Once you hear the one, go back to your house. Right.
Just apply like, to the other, woman question she had about people who have equity and they can't access it. And this is
People who have equity can't access it, but need to pay taxes that are in arrears and can't necessarily refi because of their current credit situation. That's where I was referring to. Home Saver Advance might be the tool for them since they can't really refinance. And they're delinquent.
But they have to make a payment, you know, like you said, it's 0 interest for the first 6 months.
Correct, and then 5%
Right.
after that for the remainder of the 15 years. And again, 5% is obviously well below market.
Right.
Question?
Just
Yeah.
for clarity again, it was 15,000 or up to 15%?
Whichever is less, correct? I'll go back to that slide so you can
Whichever
check
is
those
less.
out.
Do we know which services are participating with this?
All Fannie Mae servicers are.
Also, that's a requirement now.
Well, they would be servicing the loans on our behalf anyway.
Right.
So yeah, it is a requirement that it has to be our loans
Okay.
to use that. Other servicers might, well actually nobody has anything like this. The other options, outside of Home Saver Advance, all servicers pretty much offer those. Home Saver Advance is strictly Fannie Mae. For now, until somebody else decides, hey, that works, it's cool, we'll do it too.
How do we find out who the servicer is?
You can talk to the actual, well, you know who the servicer is. That's who the borrower is making their payments to.
Well, usually like, Countrywide and all that stuff, so that's not,
Countrywide uses Home Saver Advance.
oh, they do?
I mean, they're listed.
They're the biggest user of Home Saver Advance.
So the customer
You
has
just have
to
to
go
call around and
They
ask.
need to go to their servicer. Their servicer will have on the screen that says, okay, this is a Fannie Mae loan. We have these options. This is the other guy's loan. These are our options. They'll have all that. The servicers will have all that on the screen when a borrower makes a call into it. Also, if a borrower is working with a nonprofit, nonprofits also can get that information for them too. They have contacts at servicers where they can go out and figure out who's servicing the loan and help that that consumer through the options. All right, so for servicer, it's quick to process. It can be initiated when the mortgage is only 2 payments past due. Okay, everything else is usually 3 payments past due, seriously delinquent. For the Home Saver Advance, 2 payments past due, you can use this. No need to, well, you guys don't care about the pools or anything. The servicer also receives, actually it's a $700, I need to change that, incentive fee for using the Home Saver Advance. For Fannie Mae, no need to restructure the loan term. Again, no need to go through the expense of foreclosure. And we also continue to receive our income from principal and interest. For the borrower, their mortgage is brought current, no interest and no payments for the first 6 months. And then low 5% interest rate on for the remainder of it. And they get to stay in their home and avoid foreclosure.
Is that second loan recorded to the credit bureau as a second mortgage or a second?
No, it would just be an unsecured loan.
And what about the credit score?
So
No
the
credit
credit
score.
score went down, it should go
Oh, the
back
credit
up.
score is probably going to be pretty rough. Or, well, actually, if they only go 2 payments down,
Right.
the credit score is going to be low, but there's no credit score requirement. The
Okay.
requirement is, this is a Fannie Mae loan that's being serviced. The likelihood that this could keep that borrower in their home and need not go to foreclosure is really the only test. If the servicer looks at it and says, well, there's no way that this will even work for them, you know, maybe there was a death in the family, loss of job, just something where that income can't come back to make the payment, then they're going to be, well, this doesn't fit. These are going to be your next options. Maybe we can do a loan modification, and then maybe